Welcome, everyone. I'm Catherine Hecker. I'm the chair of the nonprofit section, and we will give everyone a few minutes to come in from the Zoom waiting room. It looks like most everyone is in. So I want to say welcome to our March nonprofit CLE series. This is our first of 3, and we're very excited about our program today. So first, we will have basics of nonprofit endowments with a team from Malden and Jenkins. So we've got 3 presenters from there today. And the second session will be on access to justice. It will be a professionalism CLE. And one thing I wanted to mention is that you don't need to take any action today for CLE reporting. The bar will handle that. So for our first presentation, we have Eliza Howell. She's a partner at Malden and Jenkins and serves as its nonprofit practice leader. She's a CPA and a certified government finance manager. She serves on the Georgia Society of CPAs not-for-profit task force and is a member of numerous other nonprofit related organizations. And she has spoken for us before, so we're glad to have her back. John Schultz is also a partner at Malden and Jenkins. He is a CPA and specializes in providing various attestation and consulting services for the not-for-profit and education practice. We also have Ben Peterson. He's a senior manager there. He's a CPA and also specializes in nonprofit audit and consulting services. So thank you again, and look forward to hearing from y'all on endowments.
Thank you.
Thank you, Catherine. Good afternoon to everybody out in the Zoom webinar world. Since Catherine already did our introductions, Elise, I don't know if we want to spend too much time on them, but we're excited to be with you today. Elise and really Ben and myself work with almost not-for-profits almost on a daily basis, and part of our job responsibilities. A lot of times we kind of, little background of our firm, we separate really education from nonprofit, but a lot of the education, what we're talking about today, is really nonprofit. So we might use that terminology, but we're really talking about the same thing, because a lot of the education clients that we serve are their legal entity structure are nonprofits, and they do have endowment portfolios. Quickly, we just want to go over the agenda. We're going to do a quick overall introduction of endowments, and really what we're talking about is a MIFA, which is the state law. We'll go into a little more detail about that. The next, we'll talk about really discernment and really just judgment and understanding of the organization. And a lot of our slides, we did want to make the comment, there's a lot more than we're going to go over, and a lot of them are really more for resources. We've provided these to Catherine and the State Bar, so I believe they will be sharing these. We will not read each one. We'll kind of fly through some, but we did want to encourage, if there's any questions throughout, feel free to put it in the chat box, and our team will do our best to monitor those and see if we can answer them throughout. And with the chance where maybe we're not able to answer, we'll get you an answer and can follow up directly after if need be. And then just overall sentiment of our presentation, we're trying to stay away from the accounting specifics. We're kind of our area of expertise, and we really want to talk about endowments and nonprofits and really a MIFA from a fiduciary and governance perspective. So that's a lot of what we're going to get into is really from that side. If there are questions about the specific accounting, feel free to ask those, and we'd be happy to answer them throughout. All right, a quick introduction. When we say really what we're talking endowments, we're really referencing a MIFA. And for those who are not familiar, it really the acronym is Uniform Prudent Management of Institutional Funds Act. So in shortened for a MIFA, it was actually adopted. It is state law. I know Elisa will get more in details, but it's been a state law in Georgia. I believe it was adopted in 2008 was the official year. And it really governs and really presents the legal structure, what really non-for-profits have to abide by throughout. So we'll get in a little more detail of that throughout, and that'll be more more of Elisa's sections. But for the introduction, we really wanted to start with really the nonprofit fiduciary unique role that nonprofits actually really provide in our society. And when we're talking about fiduciaries and nonprofits, we're really referencing the board members as well as management. Part of their responsibilities, a lot of board members really offer their time, talent, and you'll hear treasure. A lot of times they have, they're invested, so to speak, with their own money, time, and talent. And really, they're encouraged to recruit others to be part of the mission of the not-for-profit. The governance function, we're going to go into a little more detail of that in a minute, so I don't want to talk too much, but we're going to discuss the organizational needs, priorities, and strengths and constraints, understand the responsibilities and potential liabilities of the governing board. We'll talk a little bit more of that in the fiduciary responsibility and how does the board or committee carry out its duties. And then the presentation, we provide a framework for answering really these questions, more complete discussion, which we'll talk a little bit more of really the principles of governance and understanding of a nonprofit, which we'll go over a little bit later. All right, so discernment or really just judgment and understanding your organization. There's really in the US economy, just stepping back, we really think of it in really three sectors. There's really the private sector, and really what we're talking about there is the for-profit. You have the government sector that supports the community, and then the third sector is really nonprofits. And that is really a huge umbrella, what really falls under nonprofits. And we wanted to do a little more detail about that. It could be what we think of as foundations of really philanthropic organizations. It can actually be trusts, educational institutions that really can be a wide range. It's private can be K through 12 schools. Higher education, it can be actually private college and universities, as well as what we refer to as supporting organizations, athletic associations, real estate foundations, philanthropic foundations that really support the higher ed or the college or university's purpose. And as well, the last piece of that, it really can be club or associations. For the IRS terminology, we call that 501c6 or C4 organizations, but it's really membership organizations. And a good example of that is simply the state bar. And one common trait of all of these, and really non-for-profits, we step back and really what is it driven by? And when we compare it to for-profits, the commonality of for-profits is really they're really driven by to make profits, right? The money-making motivation. Well, not-for-profits, just conceptually stepping back, they do not have that profit-driven motive. They're actually mission-driven, or whatever their tax-exempt purpose is really what that drives and steers the decision-making of the organization. By that, it does not mean nonprofits have to make money and obtain resources to serve their purpose. But that is a key distinction between for-profit and nonprofits. And you'll hear our presentation numerous times today. We'll kind of reference that mission-driven purpose of the organization. All right, some common characteristics. Really, activities really for not-for-profits are really intended to benefit the society. Stepping back, and IRS, when they actually approve a nonprofit, there is the underlying purpose of the organization is really to benefit the society or our society as a whole. Sometimes that can actually, there's a thought of who really owns the nonprofit. And sometimes we'll see maybe new board members. Board is actually responsible for the governance of nonprofits, but they do not own the nonprofit. And sometimes that understanding, we have to explain that to the governing body, who really owns it. Really, no one owns it, but we like to think that really the public owns it, because it's really there to provide a service to the society as a whole. Some common characteristics. Really, when a not-for-profit is formed and the IRS approves the not-for-profit status, the thought is that it's really incepted and it will perpetually exist really forever, or we call it in perpetuity. Reality is we probably all know that is not the case. Nonprofits actually, like I mentioned earlier, have to fundraise and obtain resources to serve their mission. And unfortunately, from time to time, a not-for-profit will actually dissolve. They don't lose the resources, or maybe the need changes and it's not needed and it goes away. But the thought when it's approved from the IRS and government standpoint, really that it's really to exist forever. Generally speaking, another characteristic common across nonprofits is that they're substantially free from taxation. So if they serve their mission, we will talk about UBIT. If people have ever heard of that, what that stands for is unrelated business income taxes. Sometimes when a not-for-profit has a line of business that does not align with its taxes and purpose, they have to evaluate that. And if they actually make money on it, the government or the IRS requires them to pay taxes on it. So we'll go in a little more detail about that, because as a nonprofit, you have to be very mindful of that when we talk about investment policies and really the nonprofit investing in what we refer to as alternative investments. That kind of comes into play. So Elisa and the team, we'll go into a little more detail about that later. And then we'll talk about private foundations. They are a little bit different. I don't want to go in too much detail because we have another slide that's going to go in a little more detail about it. Diverse funding sources, just nonprofits in general, they can obtain resources from various ways. One is really through what we call contributions, fundraising efforts, campaigns. Sometimes they're capital campaigns, really from the public giving their own time, talent, and treasure. The second is a lot of times grants can be a funding source for nonprofits. That can be at the federal level, state level, or local government level. But really, that's a whole nother animal in itself, which we're not going to talk about as much today, but it is a significant part of funding for nonprofits. And then the third is really what we like to think of as endowments, where really it comes from fundraising and donations. But the thought of an endowment really is that, and this is generally speaking, but when say someone gives money, they actually the nonprofit agrees to invest the money, never actually spend the corpus money, and then whatever donate or investment earnings comes off that corpus contribution, you can actually spend that on the restricted purpose or whatever the purpose is of the donor. So for example, if a donor gives, say a very gracious donor gives $1 million, that corpus will never be spent, but it can be invested. And then if that investment portfolio has a return that averages maybe 5%, they can actually spend those monies on whatever purpose that the donor has instructed to the nonprofit over the life. And the thought around endowments is that these types of gifts, even though I think nonprofits would like to have more than they probably have, but the thought is that they live in perpetuity. Versus a contribution that might have not have this perpetuity restriction, it's really one-time funding, right? So they get it, they spend it, but then they have to go out and get more. So the thought with endowments is you can actually invest it and you don't have to do so much fundraising, and you have a revenue or funding source over the life and really in perpetuity of the organization. From our experience, a newer not-for-profit does not obviously have as many endowments, and they have to spend a lot more time on fundraising. So a more mature nonprofit that's been around a while that actually has some endowments, you'll see that really the management and really governance does not have to fundraise as much, and they can actually use that time back and serve the mission or taxes and purpose of the organization. Right here, we just sources and categories of endowments. We don't want to spend too much time, but really the thought is generally there's a couple types of foundations. One is a private foundation. And this is generally speaking that they are a little bit different, but generally a private foundation is created with a one-time payment. Maybe someone passes with significant size estate that they want to turn into a private foundation. If we're all in the Georgia, Atlanta area, probably one of the most prestigious private foundations, just from name recognition, is the Robert W. Woodruff Foundation. That is a private foundation. And the thought is there at the time of the passing of Robert W. Woodruff, the money was given over, that investment was actually, or the contribution was invested, and then over the life, it actually has a return and serves that they use to serve the purpose of that organization. The second one is the more common, and that is really what we think of as a public nonprofit. So if you're not a private foundation and you have your nonprofit status, you are by definition a public not-for-profit. That we were not going to go in more specifics, but to maintain your public status, there is a public support test that the not-for-profit has to meet. But generally speaking, the majority of not-for-profits in our community are the second category right here, which are your public nonprofits. Sometimes for funding sources, a donor, the hardest type of dollars to get for a nonprofit are your unrestricted dollars. And once in a while, they'll get lucky and get an unrestricted endowment, which for purposes the organization can use for whatever reason or purpose they would like, as long as it aligns with the tax-exempt purpose of the organization. And once in a while, the board itself will actually, maybe they have an operating reserve policy where they, as part of their strategic plan to put money aside to protect the organization, they might elect to invest their own monies into the endowment portfolio. And that is actually referred to as board designated or quasi endowment. A lot of times it is actually good governance to follow with those specific funds, the UPMIFA requirements, but if we're being technical, they are not required to. So when we really are talking about UPMIFA, we're really talking about those third-party donor restricted and donor endowments. And one thing I did want to point out, just that we see this a lot. It's just it's not really a misconception, but it's just from the public and the board, and a lot of times management as well. They will reference the endowment portfolio as investments, and the terminology, at least from our side, they are a little bit different. So what we're talking about today is really the endowment of the UPMIFA side of it, not necessarily investment portfolio, because a organization could have some investments that, like we mentioned, part of the quasi endowment or a short-term operating reserve investment that doesn't actually have to follow endowment. So, but generally speaking, when clients reference endowment, they're talking about the investment portfolio, and the majority of it falls under UPMIFA. All right, one of the key things we're just going to talk, and before Lisa gets more in the details, is just some important differences that exist between endowment investing and really your individual investment portfolio. The first thing, and just this is more a concept, but individuals are mortal, right? We're always going to die. The investments are going to can be changed to the estate, but there's taxable implications. Versus an endowment are almost always, and we say generally speaking, they really live in forever. In perpetuity is the thought behind it, and they're generally tax exempt. That's a key distinction between the two. We say generally because I already mentioned it, but UBI is something that can trigger it, as well as private foundations actually have a tax component that will go in a little more detail shortly. All right, last slide before Elisa takes over. Endowment investing requires a balance of interest between the present and the future. That concept, we like to think of it as intergenerational equity. And the thought, really from a board of fiduciary and management, the fiduciary responsibility is that the principle that future generations of beneficiaries should neither be advantaged or disadvantaged from the endowment investing and spending policy. So the thought is that you do not want to spend too much of the endowment or have a policy, a spending rate that cannot sustain in the future, versus you don't want to have a return and not spend enough. So that's probably the biggest task that a board has when setting and really monitoring your investment and spending policy, is to always be mindful of that portfolio is there to live in perpetuity and needs to be spent equally throughout the life. And Elisa, that's all I have. I'll let you take over. And Ben, if you want, just monitor the questions.
Okay, great.
Gotcha.
Thank you, John. Yeah, and just moving on into that, I was going to start with basically the rules behind endowments. And like what John mentioned, I know a lot of times, we're all, auditors by nature, and we go in to a new entity and they talk about, we have an endowment. And one of the first things that we actually do is look to see whether that's what we call with donor restrictions. So those are your true endowments that are governed by the UPMIFA regulations and the following rules that I'm going to talk about, like fiduciary responsibilities and such. John mentioned there's others, what we call board designated or quasi endowment. And that's where the board has made a determination of unrestricted assets or without donor restrictions, where they've decided to hold those for the same purpose. Technically, they're not, following that same rules of the UPMIFA, but they, it's a good practice to do so. So we're really going to focus on what we call a true endowment, those funds that are given by an outside donor. And on a set of financial statements, if you look at those, if you're familiar with the nonprofit set of financial statements, they're referred to as with donor restrictions, held in perpetuity. And there's quite lengthy footnotes that talk about endowments and all the things that we're going to talk about, all the policies and responsibilities. That's where you'll see it in the financial statements. So the first part of that is really the fiduciary responsibility, like that we talked about, the legal basis in which the endowments are governed, one of the highest standards. And this, of course, before UPMIFA was enacted, these things all held true for nonprofit organizations, having that fiduciary responsibility of any donor contribution coming in. And then later, when UPMIFA was enacted, it really talked about how those funds should be invested in prudent investment policies. But there's the fiduciary responsibility of the funds, having those assets with the highest care of loyalty and obedience, and that responsibility sets with the board and the organization itself. And then there's the duty of care. So this addresses the way in which the fiduciary carries out the duties of acting on behalf of the organization. So some of those examples are we see this a lot when like a large gift John was mentioning. A lot of times we've seen we work with very, very small nonprofits to very large nonprofits where you could have an endowment set up with $5,000. We've seen multi-million-dollar endowments set up. And just one thing to mention about that, we weren't going to get too much into the accounting behind it, but one thing that organizations have to do is keep each one of those endowments separate. So when we're talking about these duties of care, fiduciary responsibility, and UPMIFA, keep in mind that that is each endowment set up separately, that these rules have to be followed and tracked and such. So we're talking about the duty of care. So attending meetings regularly, understanding, how these funds are going to be taken care of, how you can hold these funds in perpetuity, the best information out there. Years ago, the AICPA governing accountants set up some, best practices as far as duty of care of investment. So these are some of the things that are taking over the responsibility to make sure that that's all carried out. Then there's the duty of loyalty. This requires the fiduciary to carry out its role, put aside his or her own interest. Some of the things here really to highlight, and I know a lot of you are familiar with this, but especially as attorneys with conflict of interest. So you'll see it very common in a nonprofit organization. You want individuals that are experts in certain areas, a lot of bankers, investment individuals, helping, but making sure with that duty of loyalty that you have a good, and the nonprofit has a good conflict of interest policy set up to make sure that you're avoiding obvious conflicts of interest and other demands that are, more subtle in the judgment. So that's just really the duty of loyalty, and making sure that any board members or any other investment individuals involved with the endowments itself, you have good policies and practices around conflict of interest when you're.
Yeah, Elisa, that's a great point. One recommendation I would make with this is the conflict of interest policy. That is not a one-time thing to adopt. It really needs to be annually, and the board and really management, they need to evaluate that each year. Sometimes we'll have maybe a new client that maybe have done it or done it once in the beginning, or maybe every couple of years, but you really need to be, as long as the board members are changing, it's something that you need to do. We recommend always to do it at least annually, just to always be mindful of that.
Yes. And the duty of obedience, this is just really talking about, if you think about from a practical standpoint, the origination of the money, the original gift, those individuals, the donors had, specific purpose in mind. And this duty of obedience really is, and what we always say when we go in to do an audit is you're following the donor's wishes, making sure what they set the money aside for. I mean, we give you examples, but it's very common. I know we mentioned, higher education a lot, because you see some of your largest endowments with colleges and universities, but certainly with philanthropic organizations as well. But some good examples are, for instance, like different scholarship programs, whether it's, for an accounting program or an attorney program or a nursing program, those donors had an initial intent in which they wanted their money spent. So this duty of obedience is making sure that those funds are set aside for that purpose, and it's the donor's intent. We were talking, right before this presentation, a little bit like what happens when an organization can't fulfill that anymore. We see that sometimes that there's a certain program in a college and university that's no longer offered. Always reaching back out if there is the donor or the donor's family that can, they said that this program is no longer offered, but would you be willing to carry it into this program? So just making sure that obedience, following the donor's wishes with an endowment is very important. And then there's certain rules, of course, if nonprofit organizations shut down, or even they are no longer carrying on that specific mission, transferring those potentially to other nonprofit organizations or other programs.
Yeah, and Elisa, I like to think just maintain the fiduciary to know that it's mission driven, to align that with the purpose of the organization that they serve.
Yes. And then we get into UPMIFA. We've been mentioning it, and John mentioned it, the Uniform Prudent Management of Institutional Funds Act. I'm sure many of you are very well aware of this. So even prior to, like, I'm dating myself, but when I initially started practicing in accounting, UPMIFA didn't exist. You still had to follow the rules of, back then it was unrestricted, temporarily and permanently restricted net assets, but you still had all those fiduciary responsibilities, fiduciary loyalty, obedience, and all of those. Somewhere along the line, what happened though is the funding related to this and how these funds were invested. The accounting rules previously didn't really allow for market upswings and downswings. It was really like once the corpus went below what we call, market value, there was underwater endowments, didn't really allow for kind of the upswings and downswings within the market. So MIFA came along with some very complex rules and regulations. It's been adopted in all the states now except Pennsylvania, which has their own laws. You guys are probably, being attorneys, and this is more attorney and legal driven than it is accounting driven, but it's there to help with all those fiduciary rules of care, loyalty, and obedience. And with it, this is what you really see in the footnotes to the financial statements. It really surrounds like how everything basically happens. UPMIFA is talking about what you have to do to set up proper spending policies, investment policies, and we'll get into all those a little bit in a moment, but that's really what it's governing. It's allowing and we'll talk about like what a spending policy is and investment policies, but it's really allowing those funds, if you think about what happens in the financial statements, they build up over time, and hopefully, as the market would increase over time, and you're setting up certain ranges of what's prudent. And really what that means that you invest the funds, spending policies are really based around, a percentage, whether it's 3%, 5%, generally anything over 7% it's not really a law, but it's been perceived as not necessarily prudent to spend more than that. And that just really means, the market value gains and the return that you're making off of that. So these are very, complex rules and regulations, but it's really what's governing how those funds are invested in what we call a true endowment fund. Those held in perpetuity. A lot of this is we call procedural prudence. So a lot of this, of course, many organizations, whether it's a philanthropic organization or college and university, in practicality, what we see is an investment firm. A lot of the investment banks or banking arms have a endowment arm, and they're very familiar with UPMIFA and procedural prudence and what it takes to be able to, invest these funds prudently and follow the rules and regulations that are out there. I mean, it's really important that the boards and management, as well as the organization, understand that. They're outsourcing a lot of this, but the management and the board is still ultimately, responsible for making sure these things are followed. But there's really good, we see a lot, every day, like different banks and different arms of the bank have endowment sectors that are really good and versed in this to be able to follow all the rules.
And at least before you go to investing, I just wanted to make the comment. So if you're ever at like a NACUBA or one of the national associations that speaks a lot frequently on endowments, you will hear them say that UPMIFA, almost all of the states have adopted it. And if we're being technical, 49 of the 50, and the one state that still to date has not adopted is Pennsylvania. I don't actually know the reason. They actually have their own version and it's very similar, but they have not formally adopted. But all of the other states follow the same law, and it, like as Lisa mentioned, it is UPMIFA.
Yeah. So the first piece of that with investing, and where you see this, and if you're interested in an organization, either personally or just, part of your practice, there's a very lengthy footnote in the financial statements, all the note disclosure around endowments. There is an actual required footnote called the endowment footnote. It has a lot of the financial information as far as roll forward gains and such of that. But the commentary in the footnotes talks about all of these investment policies and practices that are required to be in place. And some of the things, of course, to consider here, general economics, inflation, deflation, like what John mentioned earlier is, of course, the idea is to maintain that corpus. There's a concept of underwater endowments, how much has the market declined to go over, but the spending policy allows you to still spend a certain amount of money as long as it's prudent over time, whether the market has increased or decreased. And that spending policy, which we'll get into in a minute, kind of help dictate what is prudent during the times. As we see, like we're in a current market of inflation. So, those percentages may be different than what they were, 3 or 5 years ago. And that is where all this comes into play: expected rate of return, income, appreciation or depreciation on the investments. And ultimately, it's to carry out to be able to maintain that corpus balance over time in perpetuity.
Yeah, and Elisa, I wanted to mention C real quick. So one thing to consider in investing is really when we're talking about expected tax consequences, what they're really getting at is really what we call in our auditor world as alternative investments. And that is a broad broad name for a lot of things. But what the way I like to explain it is if it is not publicly traded, so it doesn't have like a ticker symbol like a Home Depot stock or a Coca-Cola stock, it can be and again, on an auditor hat on, it can be riskier for the auditors to really audit and come up with the fair market value because they're not publicly traded. That does not mean they're riskier to invest in. But one of the concepts of alternative investments, one of the most common one is really a limited partnership, where if part of that investment strategy of the nonprofit is to invest maybe in a higher returning portfolio or investment instrument, some of that might be what we are referring to as alternative investments. But when an organization actually invests in these alternative investments, and more particular, these limited partnerships, it could be that ultimately legally they are technically an owner, maybe a small piece of owner of whatever business that limited partnership is in. And a lot of times you need to be mindful of that, because in the eyes of the IRS, whatever the purpose of that limited partnership is, a lot of times it has a for-profit motive that does not align with the not-for-profit non-profits tax-exempt purpose or mission. And when that happens, it's a lot of times it triggers what we call the unrelated business income. It is not necessarily a bad thing, but it is something to be mindful of, and ultimately the organization might have to pay taxes on it. So we're very mindful of it. We probably not the topic for today, but an organization needs to be mindful of how much they actually invest in it. There has been some, you won't find a black and white figure of how much an organization can actually invest before you need to worry about the organization itself, taxes at purpose, being inhibited. But we like to think usually if you get over the 30%, you probably need to start kind of stepping back and evaluating what the purpose and of the investment portfolio, and if you have too much in some of these alternatives that might be triggering really the tax exempt purpose of the organization or jeopardizing.
Yep, that's very good. And then the next piece of it, basically the spending. If you want to go back a slide, John.
Oh yeah, sure.
Spending.
Oh yeah, I'm sorry, I went too fast.
Spending policy. So there's a concept, and you'll see this in any notes to the financial statement in that endowment footnote, called a spending policy. A lot of you are probably very familiar with it, but the spending policy, kind of big picture, if you think about, it's really what has been determined. Like, you take an average period of time, 3 to 5 years, what has the market been returning, expected rate of returns, something that is that's really the idea behind this, what is prudent to spend. So you think about, you have the corpus, the original corpus balance of that gift invested. And this is what I was mentioning, early on, that each individual fund, each individual endowment that is given has to be tracked separately. So the concept of underwater endowments, meaning that it's basically depreciated under that initial gift. Each one of those have to be tracked separately. They could all be pooled together in the same investment portfolio, invested together, but from an accounting perspective and accounting records, they do need to be tracked separately. So the idea behind this is, over time, let's just give an example. If the market's returning 7%, or what's the average it's returned over the last 3 to 5 years, and then the entity decides, well, something that's prudent would be something maybe a little bit less than that, so we can preserve the future of the endowment in case of downtime. So they may decide that we're going to spend 5% of those overall earnings and it's returned 7 or, something. This is a complex analysis that's gone through on averages over time of what is deemed to be prudent based on market returns and such, and what, each individual endowment is doing.
Yeah.
So that's the whole idea behind the spending policy. So if you think about, like, just in simple terms, like if you had a $1 million endowment and it returned 5% that year, and they set the spending policy, meaning we could spend, maybe they set it at 4%, something just slightly less. That's what has been determined that could be spent that year on those purposes. John mentioned earlier, the reason each individual fund has to be tracked is because how that money was given by the donor. So one fund could be given specifically for a certain type of scholarship. The others, it could be maybe unrestricted in nature, where it can be used for general operations of the entity itself. So there's all different areas here. But all of these things that you see on your screen are what have to be considered. Future effects, like we think about the environment that we're in now with inflation and what that means. And of course, a lot of entities with large endowments really depend on, that spending policy is a big part of their budget throughout the year, being able to meet, the needs of, especially in the college and university environment, being able to meet those scholarships to, keep their enrollment up and such. And again, the big part of this is the investment policy piece of it, surrounding the idea of what the spending policy is.
Sure. And I would just add, so in my experience for the spending rate, it's usually, Elisa mentioned it, I would say 5% is the most common, but I've seen a range, and there's a whole, we're probably not the ones to talk on this as experts, but advisors, we've talked to a lot, and there's a lot of different thoughts on this, where maybe having a smaller or reduced spending rate over a period of time kind of builds the portfolio. But for the generally speaking, it's usually between a range of, like, what I like to think of 3 to 6%, and probably 4 to 5 being probably the most common.
Yeah, and like you said, like the environment that we're in, if a portfolio's been successful and the organization doesn't necessarily need to spend all that, it might be a prudent thing. These are all things to consider as management and your investment advisors, and the board is fiduciary responsibility over the funds. The current environment we're in, if the market value is going down, do they need to lower that spending rate to be able to counteract any uncertainties with what's going on in the market?
Yeah, and this slide, I just like to think of really the fiduciaries, board of management, doing their due diligence, bidding it out every couple of years with advisors, fund managers, making sure they're knowledgeable, keeping a lot of times it's very common for these investment advisors to give at least annually meetings of the returns, the strategy, and sometimes we have clients that actually bring them in multiple times a year. So just always evaluating and make sure it aligns with the strategy and purpose of the organization.
Yeah. And next, we're just going to transition. Ben is going to talk about a few things here, fiduciary perspectives related to this. And then at the end of our presentation, we'll have time for some questions and answers, but we also have a lot of other information for your reading later, just a reference that we'll go through.
Thanks, Lisa. As Lisa mentioned, I'm going to be kind of covering the fiduciary perspective of the board members and management and their responsibilities as it relates to the endowment. And, being a fiduciary carries with it a requirement of humility, the spirit of service for the mission of the organization. In our experience as auditors and, partners with nonprofits and educational foundations, the most important characteristic of solid board members is the passion for the mission of the organization which they're serving. That being a strong advocate and having the desire, to serve that organization is one of the strongest indicators of a strong board member. And generally, members of governance and investment committees are individuals who are successful business people or community leaders in their own fields of expertise. And generally they'll try to bring that, those expertise to the table when talking about in regards to the endowment. And that can create some issues occasionally, because those people, that you're a very strong business leader, you're running your business for profit. And the endowment and the nonprofit, is really there to serve the mission of the organization. And the endowment doesn't necessarily belong to the fiduciaries, or even in some respects, donor restricted portions of the endowment don't, in some sense, really even belong to the organization. Ownership of the endowment remains with the organization unless it is donor restricted, and those pieces belong to the public or really the mission of the organization. And the organization the management board is really responsible for the fulfillment of the endowment's purposes. So if a donor, gives, entrusts the organization with the money and sets up an endowment with that organization, they're entrusting the fiduciaries to fulfill the purpose set forth by that endowment. And so one of the most important things, John, next slide, please. One of the most important things the fiduciaries of the organization can do is set up what's called an investment policy statement. And what this investment policy statement does is it sets up the policies and procedures that will govern the investment process. And much like John was talking about earlier, with the conflict of interest statement, we suggest this is done by the board and adopted by the board on an annual basis. And they're constantly reviewing their investment policy to ensure that the goals of the organization and that specific endowment are being met, and that the mission is being fulfilled. If we go to John, you got something?
Yeah, Ben, I was just going to add a point. So it's quite common for people we're presenting to, well, do you have an example of investment policy? And generally, whoever your advisor is, they generally will have a template that they can share, or a free resource. We like to reference is the Georgia Center for Nonprofits. They actually have free investment policy templates. We always recommend the organization to evaluate it and tailor it for the needs of the organization. You don't want to just to adopt it and that drive whatever your policy is. Really the thought at the committee level is there's really thoughtful in how the organization wants to grow and go, and that makes sure whatever your investment and your spending rates align with the vision and vision of the growth of the organization.
Yeah, that's an excellent point, John. And to that point, the next slide it's kind of these are really just thought questions. If you were presenting to a board and they were talking about setting up in the investment policy, and really sometimes people new board members may not even know what that is. And so these are kind of some questions to be considered when formulating the investment policy statement. And it's what is our goal here? What do we want? How do we want to grow this endowment? What levels of risk are we comfortable taking? And that kind of is goes along with the limited partnerships that John was talking about getting invested in. Do we want to invest in those, or do we want to should we just stick in mutual funds or individual stocks, or what's our risk level here? And then it goes into the roles and responsibilities of those involved in the oversight of the endowment. So that'd be the investment committee or potentially the board themselves. What do we want them doing on a monthly basis or a quarterly basis or an annual basis to ensure that these goals are met? And then we always think liquidity policy is very important for really all nonprofits and educational really all nonprofits, and to ensure that they can continually meet their obligations as it relates to their operating activities. And And then, as John and Lisa discussed earlier, the investment policy statement will also outline, what our spending rate or distribution rate is, and how we come up with that number from year to year.
Yeah, and Ben, I just wanted to add to that one. So Elisa already mentioned it, but under a MIFA, as Elisa said, you can, or the organization can spend below the corpus amount. The thought is when you invest, it rides the market. So you'll have some, and this is very relevant right in today's environment with how volatile the market has been the last couple of years. But the thought is if it rides the market, there's gonna be gains and losses. And if those losses go below the corpus amount, as long as the organization is being prudent, doing their due diligence, they can continue to spend whatever the spending policy is up to that 3 to 5%, what we were talking about earlier. And the thought is it'll come back in time. I say all of that because the donor can actually go beyond a MIFA. And if the donor requires you to, even today, there's some donor agreements that actually require the organization, if it goes below corpus, they might require it to be stopped. And if the organization actually accepts that donation, they are required to abide by those rules. So we're talking about the rules of endowments and a MIFA, but it's very important that the donor can set their own requirements that the organization will also have to adhere to. And we haven't got into that, but there's a whole other policy we call gift acceptance policy that really hopes to guide and really protect the organization of what they're willing and risk they're willing to accept.
That's a great point, John. And I know I mentioned a couple of times why it's so important to keep each endowment gift separately, because from an accounting perspective, this concept of underwater endowments is by individual endowment. It's perfectly fine to pool the money together and have one big investment pool, but you have to have the mechanism to be able to track it separately. And note disclosure financial statement, laws and regulations require each endowment that would go below the corpus underwater endowment be disclosed in the financial statements and those footnotes. So not as a whole. So you may look at what's really common, what we see sometimes is it could be that the whole portfolio is above the initial gift of market, but there could be certain gifts because at the time they're given. If you think like the market really dropped this year, June 30th, and maybe they gave the gift, May 15th, and then the market dropped down. So it could be the other, if you have like 100 different endowments, a lot of them over time built up. So it's above, market value, but there could be 1 or 2 or 3 just based on the timing of the gift that could be below market. So, basically the accounting rules are saying, you need to track those individually to make sure that you're abiding by each individual donor's wishes. And like to John's point, it always supersedes what the donor wishes would be. They could really write an endowment gift however that they want. If they only want 2% spent a year and you accept it that way, that is what you would follow.
Yeah. And we see this, it seems to be more of the older endowments that are still, that thought of it's still, they're live and they live in perpetuity. But if the organization accepted it, we've seen some ones where maybe say the donor set, we allow you to a 5% return, but anything over 5%, those additional earnings, we want you to add to the corpus. So that the thought is that corpus grows. And once in a while, we'll see where clients over the years, maybe it's got lost in translation, people leaving, retiring, new people coming in, where they get in trouble, where they haven't actually been really calculating or monitoring those additions to the corpus. So all I say that is really be mindful of the gift acceptance and what you're really accepting and agreeing to, because it does live on forever.
Yeah. And I know we're getting close to our time.
Actually, at least we have a question in the chat. Jim is asking, could you talk about when the donor creates an endowment and then specifies that the nonprofit may invade the corpus if the earnings are enough to fund the spending rate, i.e. underwater endowment.
Yeah,
And
so I think we literally just talked about that. Jody, if
Yeah.
you have any further questions, but I think we addressed that. The key there is you're absolutely allowed, but you have to be prudent with that and monitor it. If this audience maybe serves on a nonprofit right now, that is a requirement in the financial statements. And you actually have to disclose when you have underwater ones, how many they are, what's the fair market value, and really what the corpus is. And you can collectively include those, but they have to be, for that calculation, they have to be individually evaluated.
Yeah. And a lot of times we do see that, like I said, timing of gifts. If a gift was given right before a big market decline, initially right from, the beginning, it could go down, but the portfolio as a whole could be up in value. But, again, you're a fiduciary for each, individual gift. And we have a few other slides, but John, you want to
these, so the rest, that's really, we're up about to our presentation time. But we wanted the rest of our slides are really resources. And the thought of is really investment models. There's really a thought how a nonprofit can go about it. One is they can outsource it to like more of a consultant driven. The second, I would probably say that's the most common, at least in my experience, is in-house, where the board is able to recruit, or the organization is able to recruit board members and committee members that have the expertise that are able to serve the organization. And then once in a while, you'll see that this is kind of the newer model, is an outsourced chief investment officer, where it's not a consultant, but really it's they're not a formal W-2 employee, but it's actually an outsourced service that they serve, and they do have a fiduciary role if they take that role on for the organization. And then other than that, the tools, so a couple of the tools at the organization's disposal. This is really for if you really serve on a nonprofit board, and we talk about and really defining your investment and spending policies. There's a couple of topics we wanted to put some resources in. One is really the asset allocation, what's appropriate for your organization, determining the spending rate, spending methodology, what to spend it on. Can be a big deal. And then new endowment, the fund of the fund flows. And other than that, I think we're right at our time. Are there any questions or comments?
Yeah, we're happy to, answer and reach out to any of us, anytime that you would have any questions. We're happy to answer any of these questions. If you serve on nonprofit boards, you have nonprofits as your clients, or just involved, with one where they reach out to you for questions. And we find, I know in the, the auditing, world, we find it very common that there's a lot of confusion among, how funds are supposed to be treated, and really kind of commingling. One of the most important things, again, if it's not a true endowment from an outside donor, and them calling it an endowment, where it is an endowment, but it's not held to those rules of a MIFA, because it's not, specified from an outside donor. So we get a lot of questions about that and how it should be handled. And like John mentioned, over time, information's lost, and nobody's, quite sure how it was initially given. So we can help with all of that. We run into it almost daily, and, can kind of give you some examples and different situations that we've experienced.
Yeah. And Catherine, I think we are right up at our time slot. We'll hand the mic back to you.
Yeah, thank you all for a wonderful presentation. And I saw there was a question about the PowerPoint and recording. And the answer to that is that you should have gotten an email this morning from Lane at the State Bar with the materials, and the recording should also be posted to the section website maybe later this week. So thanks again to everyone from Malden and Jenkins. That was fantastic. So our next presentation is for professionalism, and in particular focusing on access to justice in Georgia and how we can close the gap. So we have a panel of 3 speakers today. Rachel Spears will be moderating. She is the Executive Director of Pro Bono Partnership of Atlanta, and she served in that capacity since the organization's founding back in 2005, I think. And she's also a former chair of this section and has continued to stay involved. So we always appreciate her coming back again. Next, we have Steve Gottlieb, who is the retiring director of Atlanta Legal Aid. And I'll say, it's hard to give a bio for him. I just actually sat through a 3 or 4 hour dinner retirement party for him a couple of weeks ago. So I'll just leave it and say that he has built Atlanta Legal Aid in one of the most preeminent legal aid organizations in the country. And we'll leave it at that.
Thank you.
And last but not least, we have Ratha Monti. She is an attorney in the Atlanta office of King and Spalding. She's a member of the firm's trial and global disputes practice, and she serves as the pro bono deputy for the firm. So welcome and thank you all.
Thank you, Catherine. I'm going to start by apologizing in advance for my cough. It's a good thing we are virtual today, and I will try to mute most of my coughs. I'm going to start by just asking Steve and Radha to introduce themselves, and then I'll introduce myself after I have a moment to cough. So Radha, do you mind starting us off?
Sure, no problem. Can you hear me okay? Great. My name is Ratha Monti. I'm the Pro Bono Deputy at King and Spalding. I help run the Pro Bono program, so I get to interact with Rachel and Steve and other leaders of nonprofits here in Atlanta and across the country every day, and try to get our attorneys involved in Pro Bono and manage the program that way. And it's just an honor to be here with my co-panelists. I'm delighted to be here with y'all today.
I'm Steve Gottlieb. I don't know where to start. I ended up in Atlanta almost by accident, but I've stayed for quite a long time after that. I found Atlanta Legal Aid was much to my actually just kind of love and found my niche and have tried to pursue it and have, I think, a long perspective on what pro bono means and for that matter, how it's changed. So I'd love to kind of get into that when we do. Thanks.
Thank you, Steve. I had a feeling you wouldn't say that much about yourself. So I have the program from that dinner.
Okay.
And let me just add in a great picture of Steve when he started at Legal Aid back in 1969.
One of the people in the office said I look fly.
We've got some baby pictures in here too.
Right. Maybe I look fly then.
I'll just add to Steve's modest introduction that he's won awards from the American Bar Association, the Anti-Defamation League, Emory University, Georgia State University, Georgia Bar, everybody you can think of. Steve has been honored, and we are honored.
Thank you, Rachel.
On the panel today. So I'm Rachel Spears. I'm the Executive Director of Pro Bono Partnership of Atlanta. I have been there since we started in 2005. We provide pro bono opportunities specifically geared towards in-house attorneys and transactional attorneys by matching them with nonprofits in need of legal assistance. Hence my great interest in the nonprofit law section, because we have served about 1,000 nonprofits in Georgia with free legal services, including the Atlanta Legal Aid Society, I will add. So I will get us started. We are going to talk about access to justice today and the justice gap, but we're going to do that in the context of professionalism so that you can get that elusive professionalism credit before March 31st. So we are happy to have your interest today. So just a brief overview on professionalism. I'm going to read a little bit. As you know, we have to follow certain rules when practicing law. Those are laid out in the rules of professional conduct. Those are the ethics rules. As Chief Justice Clark said, ethics is that which is required, while professionalism is that which is expected. Professionalism is intended to be a positive goal, an ideal that each lawyer should strive to incorporate into life and the practice of law. So you have materials that you got today. They include the aspirational statement on professionalism and a lawyer's creed, which I encourage you to review. And they set forth specific, both general and specific aspirational ideals of the legal profession. And we're going to focus on a few of those today. One key aspect is that all lawyers should aspire to provide the pro bono representation necessary to make our system of justice available to all. That ties in directly with our topic today, access to justice. I also want to note that the Georgia Rules of Professional Conduct, aka the ethics rules, what we're all required to do, also discusses pro bono service. And in that, it says in 6.1, which we've also included in the materials, says every lawyer should aspire to render at least 50 hours of pro bono service per year. So that shows just how important pro bono work is to the practice of law, and also to ensuring that our system of justice is available to all. So I'm going to ask some questions of our esteemed panel, and I'm going to chime in as well as we discuss. But I'm going to start with a question for both of you. So I looked it up, and the justice gap, which we're talking about, is the difference between the civil legal needs of low-income Americans and the resources available to meet those needs. We know that there is a gap between those two things. I have a statistic list in the materials that says that low-income Americans do not receive any or enough legal help for 92% of their civil legal problems. 92% of their civil legal problems, they are not getting adequate legal help. That is alarming. So my question, let's start with Steve. What does that justice gap mean here in Atlanta?
What it means is that we triage. It means that when people call legal aid, and we don't even get the 92% that are not served, we get whatever percentage of those people who call. And in fact, I can give you a number on that too, that we end up deciding that certain kinds of things deserve or require or allow for our services much more than others. And the word triage is as good as you get, because triage, in the legal way, if you got someone who has a problem that you can't resolve, then that becomes on the bottom. If you have a problem that is not as serious, that becomes on the bottom. And you just choose the problems where you think you can solve them with reasonable involvement. So what it means is that we choose every day to do certain kinds of cases and make decisions that there are certain kind of cases that we can't handle and people can handle themselves, which is not really true, but we make that decision anyway. And then there are problems which we can't solve at all, and we know we can't solve them, and we don't handle those either. To put it in perspective, of the calls we get, we provide services in probably 50% of the calls, and that's not counting the people who don't call, obviously. So the number may be 92 in the abstract, but in real world, it's at least 50. So what the answer to the question is, we try to do the best we can by figuring out how we can make the most difference based upon what are the problems we can solve. And I might add, what are the highest priorities? So we make a decision that certain kinds of things are not high priority for the clients. For instance, we could do nothing but handle family law cases. We've decided that unless there is some special reason like domestic violence or child custody, we won't end up handling those kinds of cases. People who just want to get divorced are not cases we can handle, because we've come to the conclusion they're not high priority cases. So again, what we do is we pick and choose. And that's basically what it boils down to.
Steve, can you help put a face on the justice gap, how it impacts the lives of individuals here in Atlanta?
Sure. Well, I mean, the easiest one, I think, to start with is landlord-tenant cases. We know that there are lots and lots and lots of clients, and particularly with the with COVID, who are people who just didn't have money, and therefore they couldn't pay their rent and were going to be thrown out or had to move. There was an ultimatum for a while, but that has expired. Excuse me, not an ultimatum,
Moratorium.
excuse me,
Moratorium.
moratorium. Thank you for the word. But we also know that even for people who don't really have a substantive defense, like they didn't pay their rent, they could benefit by having a lawyer to negotiate something with their landlord. So the justice gap is just really broad, even in areas where you don't think that there's a dramatic impact you can make. And we don't handle those cases because, again, we've got to handle the ones where they really can do something. But that's an example of how we really don't get close to dealing with the legal needs. Now, in some cities, like in New York and in some other places, they actually guarantee lawyers, in theory, for anybody who has a dispossessory. I'm not sure it actually works, but the point of the matter is that's the face of the justice gap. That's the easy one.
Thank you, Steve. I'm going to ask the same question of Radha, and Radha has an interesting perspective. She works with our organization, a pro bono partnership. They work with Atlanta Legal Aid Society, and they work with lots of organizations here in Atlanta. So Radha, to you, what do you think of when you think of the justice gap in our city?
I try to think of how we can help address it. I mean, I think, the numbers are staggering, and I've heard them before and they knock me over every time. And so I like to try to just think about what, we as King and Spalding and what we as individuals can do to help address it. I think, one way that ties into kind of the purpose of this panel is, really working with our nonprofit partners, legal services partners, and getting involved in pro bono cases. We obviously cannot handle that 92% of people that are unrepresented, but we can do a little slice of it. We can take what we can, and working with our legal services partners, make sure that we're helping them to the best of our abilities, and that we're working on the cases where we can actually make a difference. And we can take it that way. I think, another thing that we can do from our end is donating and sponsoring money for these great nonprofits that are on the ground. And I think that's true for legal services orgs and social services orgs that, still play into the justice gap, play into people's ability to access the legal system. And lots of other great nonprofits that are working with the large percentage of Atlantans that just fall into this gap. And I think another thing that we can do is, educating ourselves and lending our voice then to it, because I think that there are a lot of people within the legal community and outside the legal community that don't necessarily realize that there is this large justice gap. And if you can get people fired up about something, sometimes you can get some change made. So those are, the kind of top three ways that I like to think about how we can try to solve it. Do our little piece, because all the little pieces coming together is the only way anything really happens.
Radha, I'm going to put you on the spot a little bit because I know you've done a lot of pro bono work even before you took this role. I wonder how you would put a face on the justice gap and maybe think about one of the clients that you've helped, that you were able to help, meet those legal needs. Like, what does that look like to you?
And I think maybe Steve got in my head, but I'm going to also talk about maybe a landlord-tenant issue. But we've done a lot of work with AVLF, the Atlanta Volunteer Lawyer Foundation, with their housing work. I know Legal Aid has worked with them as well. And there was that Forest Cove apartment complex that was condemned by the city. And the residents have gone off to various other places to live, and thankfully Forest Cove helped relocate them. But there are folks, even, former Forest Cove residents, who are still dealing with housing conditions in their new places. I can tell you, I have one case right now that I took from AVLF for a woman who couldn't stay in her apartment at Forest Cove and had to move her family of 7 into various hotels over 2 or 3 month period. and was promised that she would be reimbursed for that. And they had to move because of the mold problem that was aggravating her like asthma for her in her children and other medical conditions. You know, she's been in her new apartment for months at this point, and still hasn't been reimbursed for the 2 to 3 months of hotels. So working with her to get those numbers together, get the receipts together, and actually get her reimbursed for that. It's thousands of dollars at this point. So, you know, that's kind of what I think of. And I think of the justice gap. It's something that, you know, if I were facing that issue personally, it seems so natural. You just put the receipts together and you go talk to someone about getting reimbursed. But for someone who's maybe not as familiar with the legal process, and with all of that, it's, you know, seems like an insurmountable hurdle until someone can come in and help them.
Rhoda, can you talk about some of the other organizations you work with that are addressing the justice gap?
Absolutely. I think Georgia Justice Project is a really great organization. They are a little more on the criminal side of the law, but the work that they do with pardons and record clearing really does affect people's lives outside of the criminal justice system. So getting misdemeanors or felonies, or even just times when, you know, someone was arrested, that's going to be in your record, even if no charges ever came out of it. And that can interfere with people's ability to get jobs or to secure housing, and just, you know, kicks off a chain of events that leads to everything else in life being so much harder than it needs to be. I think they're a really great organization as well. There are I could talk for hours. I think y'all know this on just the immigration issues, but I will just specifically mention the Georgia Asylum and Immigration Network, GAIN, KIND, Kids in Need of Defense, Tahereh Justice Center is newish to Atlanta. They do really great immigration work as well. We work with Georgia Lawyers for the Arts. I know that doesn't necessarily sound like pulling in the arts would be talking about the justice gap, but they do a lot of work representing, you know, artists who don't have a lot of their resources, both in like IP and business kind of contract needs, but also sometimes other issues that these artists have in their lives. They will help. I know 100% there are more, and I'm just coming up blank right now.
Yeah, let me chime in here. One of the things that, in terms of dealing with the justice gap, that we realized way early, when you didn't call it the justice gap, was that we were not going to be able to serve everybody. And so we have made a habit and part of our tradition of trying to coordinate with other organizations which have particularly focus on particular areas. So if you go back to 1976, we actually helped create AVLF because we knew that we were not going to be able to do volunteer work in the way, or get volunteers in the way that an organization which was particularly created for that purpose would be able to do, because that would be their focus. And we did it only as a kind of a, well, it'd be nice to do this, but we've got other things to do. So one of the things that we've always looked for is to figure out ways that we can be a piece of what other organizations do, or vice versa. So AVLF for 40 years had people coming to our offices to do landlord-tenant cases. More recently, we've had an association with KIND to represent the unaccompanied minors coming across the border. And so we have lawyers in our program that work with the KIND organization and the KIND lawyers to represent kids who could be in the United States if they get sponsors through a family law procedure and then an immigration procedure, where not only can they stay in the country based upon this, but now with the change of the administration, they actually can get work visas to stay in the country and stay in the country. And so we've tried to do things in different ways to bring in other organizations or be part of other organizations. We're part of organizations that deal with domestic violence, where we do part of the work for them and they to supplement what they can do. So one of the things I think we've done over the years to try to address the justice gap is to work with those organizations that have special purposes. And so they can supplement, we can supplement their work. For instance, and another area that we're getting involved in is we're going to be doing work with veterans who are homeless, to not to work on the cases where they need to get benefits, because there are other organizations that can do that, but we will represent them on the issues that relate to being homeless, and they happen to be veterans as well. So that's another way to think about how you can address the problem by collaborations.
Thank you, Steve.
I think
Go ahead,
I was,
Loretta.
you don't mind, I was gonna say, along those same lines, looking at collaborations, I mean, I think that's kind of the model of pro bono that I think is really what can help address the justice gap as well, is, attorneys that are not at legal services nonprofits working with the legal services nonprofits, and just being that many more hands able to help. And that's what I love about being in the pro bono world so much.
And to predict your next question, Rachel, how much does that do and how do we do it, right? And what are the limits of it? Well, that is
Yeah, before I let you answer that, I've got to get up and let in a barking dog. But yeah, just to expand on that, Steve, we know the gap. We know kind of things we can do to help it. How do we get more attorneys to help with this, get engaged with pro bono work? What are the challenges to getting them involved? How do we help address those challenges? I know these are both things you both.
Right. Well, Roddy, you want to start with the challenges you find over there, and I'll give a little bit of a historical perspective on this after you tell us what the real world is nowadays.
Sure. Yeah. I think it probably boils down to kind of two big buckets of challenges, and there's, lots of little ones you can put within each of those buckets. But the first one would, I think, just be time. People have such demands on their time, both professionally and in other things you're involved with in your life, and just, your family, just your day-to-day life. And it can be really hard to think about, well, how do I carve out this additional time to take on this additional work, take on this additional responsibility of helping someone. So I think that time is a big challenge. And I think there's also a fear. And I think that fear really comes out in two different ways. One is a fear of stepping outside your usual practice area. I will say for King & Spalding, I think this is true of most firms and probably lawyers in-house as well, that when you're doing pro bono work, you're very often operating outside of your normal practice area. And there's some fear there, right? You've spent your career building up your expertise, and then you go step into another area where you're essentially just a baby lawyer again. And that's kind of scary to think about. And I think that some people also can see the fear in that, oh no, there's a really big responsibility now, and I'm doing something that can really affect someone's life. They have that, that worry that they're going to somehow screw it up, and that they're going to have a bad outcome on someone's life. Whereas when you're at a firm representing a company, if you lose a lawsuit against another company, you've lost some money, right? You have for the company, you haven't lost someone's housing or their immigration status. There's more real life stakes, I guess, if you want to say that, that I think is another fear that people have.
And to give you the historical perspective, I think this has gotten much more focused. In the 70s, firms would just simply send younger lawyers and go and do a housing case over at Legal Aid on Saturday morning. And the fact of the matter is that the firms could say, you do it because you're a young lawyer. I don't think the firms have quite that control anymore. And maybe people were not quite as scared anymore because scared as much because the firm, law has gotten so much more specialized. I think people get even more in their niche and more afraid. And that's certainly true for transactional lawyers who, when they come to legal aid, they may have to do something which they view as a court case. So I think when we first started, we had more of the view that what we would do is get pro bono lawyers to do the cases that we thought were the highest priority that we couldn't do. Big, oh, I don't know, custody cases or some regular legal aid case which involved a landlord-tenant case with difficult facts and so forth. We began to realize over the years that that was not going to happen. That no longer would there be lawyers from King and Spalding, to the extent there ever were, lawyers who would take on those kind of cases. And so what we've had to do is to figure out a way to make the cases much more handleable, less scary, less time consuming, but still valuable to the client. That has been a real trick. That's a real trick. And so what we try to do is figure out ways of getting people to do something that they may be a little bit out of their comfort zone, but not quite. Let me give you an example. We've been doing a lot of gender affirming name changes. Well, lawyers don't do that, name changes, but it's not very hard. You got to go to court, but nobody's going to second guess you on it if you're in the right form. And it's also something that people really find valuable, particularly nowadays. So there's the nexus of something which is a limited scope, something which is not quite so much out of your comfort zone. By the way, we of course do training, and which can be done by somebody in a larger firm, and they feel that they've accomplished something, and the clients feel that they've accomplished something. So that's the trick. And how you do that is a never-ending cycle of figuring that out. I could give many other examples, but let me just stop there unless Rhonda has some other that she would want to mention.
I actually think that the name changes are a great example, and I think that that project itself actually hits on a lot of the kind of ways I think you can mitigate people's hesitation for getting involved in pro bono. And I will give a shout out to Legal Aid's project for the name changes. I have a case right now actually that I'm working on. We're in the notice period, so we're just kind of sitting. But I think it's true that they provide really great training. It is a relatively short training. With an hour training, you actually know what you're doing. There's forms that are provided so that you know that your documents are in the right format. You have all of the right documents. There's instructions for how to file it. Dealing with Odyssey or Peach Court may be a different story, but you can get through that. There's the mentorship from the legal aid attorneys to answer all of your questions, and they don't take very long. So I think that it really is a great example of a way to get people over those hurdles of doing the pro bono and feeling like they've helped someone, they've accomplished something, and they didn't get scared off by it.
Rachel, you have a different kind of organization, and you inherently can get over some of the hurdles because you're asking people to do things which they sometimes already have experience in. Why don't you talk about that?
Yeah, thank you, Steve.
You're welcome.
So we were set up, as I said, as a way to get transactional lawyers and in-house attorneys more involved in pro bono work. And we are constantly thinking about all these issues and how we can address them. And our model is set up to address a lot of these issues. So as I mentioned, all of our clients are nonprofit organizations. We don't represent individuals. We represent the nonprofits. We help them with their business law needs. And we have attorneys on staff who help identify what those needs are, break them into discrete projects that we then assign out to volunteer attorneys. And the projects tend to be in the areas of contracts, corporate governance, employment, intellectual property, real estate, tax, but we do privacy, healthcare, like all sorts of things come through our door. And so it's a way for attorneys with those particular expertise to come in and do a project that is similar to the work that they do every day. And to the extent there are nuances, because it's a nonprofit organization, we have staff attorneys that are there to help. We have form documents that we provide. We do things that like provide malpractice insurance. So that's really important to in-house attorneys. We pair attorneys that might not be licensed in another state with Georgia licensed attorneys. We really try to address all the barriers to get lawyers doing pro bono work who maybe just felt like they were too many things in the way in the past. And Steve, you and Rada, you both know this. I was at King and Spalding as an associate years ago, a transactional lawyer trying to do pro bono work and facing all of these challenges, and loved my work. A lot of my work was with the Atlanta Legal Aid Society, the Adoption Project, which is another, that caregiver adoption project is another great way for transactional lawyers to get a little bit outside their corporate zone, get good training, get supervision, all that stuff, to do really rewarding work. But I understand as a transactional lawyer how frightening it can be exactly to take something outside of your comfort zone. So there are lots of opportunities out there. I mean, we can go on and on, can't we, guys, about all the ways you can get involved. You can learn something totally new. We have, some volunteers just want to learn, like want to do something, they're sad they never get to go to court and they want to go to court. And some volunteers, want to really stay right in the comfort zone, at least maybe for that first project, and maybe they'll venture out a little bit more. Whatever you want to do, there is a way to get involved. I assume y'all both will agree with me on that.
Sure.
Absolutely.
Yeah, and in fact, let me mention that Rachel before she got started with the partnership, was volunteering, as she said, with legal aid, and did a case for a couple of clients who were grandparents and adopted some grandchildren. And when I asked her to come to the board meeting to talk about her new job as the head of the nonprofit program, she brought the clients and was so proud of the fact that she had done this pro bono work, which was a little bit outside of your comfort zone.
It was a lot.
But you were so proud of that. And the idea again is to figure out something that somebody could do by stretching a little bit, because adoptions are not that hard to do. But at the same time being valuable for both the lawyer and the client. And let me add one other thing. With pro bono partnership, keep in mind that the value of working for Rachel allows these nonprofits to provide services to low-income people. So you don't have to do it directly necessarily if you don't want to be the person who goes to court or deals with the client. You can deal with these organizations which indirectly can help on the justice gap by providing other kinds of services to the clients that we're serving through legal aid.
Thank you for making that point, Steve. That's a great point. Yeah, our clients are nonprofits that serve low-income or disadvantaged,
exactly
so
right.
it qualifies as pro bono work.
And is very valuable. That's the point. I mean, you could say the justice gap is lawyers who we don't have enough lawyers, but it's more than that. You can solve problems for low-income people without lawyers. You can do it by having some organization which provides them other kinds of services. In fact, we do that anyway. And you can do that by volunteering to help other organizations provide the services by giving them the backup. Earlier in this session, we were talking about endowments and so forth. Well, that's what you could do as part of helping a nonprofit. You could help them set up an endowment. You could help them set up bylaws, all that kind of stuff. So don't limit yourself to just, I've got to serve this individual client. You can do it in lots of different ways.
That's great.
If I could
Go ahead,
piggyback on that, I think one of the great things about pro bono work and the ability to step out of your normal day-to-day work and practice is to be able to do some good in an area that you're passionate about. And so, it could be a direct service in that area. It could also be helping a nonprofit through pro bono partnership that works in that area. And the great thing when you actually do see the project lists from pro bono partnership, it tells you what the organization's mission is. It gives you just a really good sense for who you're actually indirectly benefiting by helping that organization and helping them then serve their constituents. And it's just a great, kind of feel good part of the pro bono work.
And let me add another element that people don't often think about is pro bono. You know, we have a lot of dedicated lawyers who work on our board. And there may be people who don't want to do the actual client work, but want to be involved with the way a nonprofit works by helping them on their board. And that's a very valuable resource. Having somebody who's active on the board, hopefully who's helping their fundraise as well, is obviously very, very important. So let's not neglect that. You don't have to be representing an individual client to contribute. You can contribute in lots of different ways.
That's a great point, Steve. I want to come back to a point about the value that working with a pro bono and legal service organization can provide. We've talked about some of those things. For me, when I was volunteering with legal aid, it was the training I got, it was the staff attorneys I could go to for advice. Rhoda, can you start by speaking to some of the ways you think they provide value?
Yeah, absolutely. And I think, you mentioned the top two for me at least, which are the training and the mentoring of whatever attorneys get involved in a pro bono matter with a legal services org. But, other things that I find really helpful are having someone even to screen the cases before they come to us. So the intake process that you'll do on your end before those cases even show up in my inbox to try to place them. We know that they are people that have a legitimate claim to make or asking for something reasonable that makes sense for their organization. We know that they meet our definition of pro bono because, on our end, we need to be sure that we are meeting that we follow the Pro Bono Institute's definition, but we need to be sure that we're meeting that definition and we provide our services for free as pro bono. And so knowing that they come from a legal services org that we work with, we don't have to worry about that then. We can take it and run with it from there. I think it's helpful being connected with legal services organizations that can provide updates on the law to us, whether we are working in the immigration space or landlord tenant or family law, or even within the corporate governance world. There's things that change in the law that we just don't have our finger on that pulse if it's not the normal area of practice for that lawyer. So having someone who is in the know and can make sure that the service that we're providing to the client is the best and most up-to-date service, I think is just huge. Getting samples and forms so that people can feel confident going into it and not reinventing the wheel, honestly. We don't need to spend time reinventing the wheel. Let's spend that time helping the additional client. So getting those samples and stuff. It's also really great when we have legal services organizations that can think of kind of limited scope, one-time clinics, which work with some areas of the law and don't necessarily work with others. But, Rule 6.5 has been added in Georgia and in a lot of states. And that makes those one-time clinics so much easier to manage from a complex perspective and not having the ongoing representation. And that is easier than for us to get our attorneys involved who feel like they maybe don't have the bandwidth to take on a full representation of someone, but they can give you a couple hours one afternoon and go sit down with the client, help them with, whatever the issue right in front of them is, and then walk away without that ongoing relationship, without that ongoing responsibility. And so having a partner that can help set that up for us means that we can hopefully help that many more clients, but also get that many more of our attorneys involved. And then the last thing I'll mention, which is maybe not so much on the legal side, but I think that people really enjoy working with legal services orgs. It makes them feel like they're part of something bigger, right? That's the into the pro bono world and just this world of helping people that you don't maybe get from your normal billable work at a big firm.
Great. Steve, do you have anything to add?
Yeah, first of all, just to make sure everybody knows, the 6.5 that Rhoda was talking about is a rule which allows you to provide brief service to a client if you're working with a legal aid organization without checking conflicts, because if there happens to be a conflict that you don't know about, it doesn't transfer to, it doesn't infect the firm. It's kind of a freebie. And so you don't get in a situation where, because you provided some service to somebody who has some particular claim that actually relates somewhat indirectly to King and Spalding clients, King and Spalding is not disqualified from its regular cases because you provided that information. It's just kind of an allowance saying, well, we'll just make an exception to the regular rules. It's not important. But let me go on and mention one other thing that Radha kind of hinted at, I think. One of the things I think that people really enjoy about pro bono and is a value is just talking to people and feeling you've accomplished something for their lives. And it can be a small thing. One of the projects that we have, and this is kind of a no-brainer, which I wish I had thought about years ago, but a few years ago, we decided we'd ask volunteers, and we thought it would be senior, that is retired volunteers, but it's turned out to be more than that, to be willing to follow up with clients who have certain kinds of issues that we can check with them about. So if client calls in and they're calling in about a landlord-tenant case, but you also know that they may have a issue with food stamps, you don't have to deal with that at that point. You can put that client's name on the list, and you can have a volunteer who then calls the person back and says, well, you called about landlord-tenant, we've handled that. What about your food stamp issue? We know you got a food stamp issue because you can tell that they're not receiving food stamps by the intake. And you call and you say, would you like us to help you with a food stamp issue? Well, we've trained people how to do food stamps, just, to make an application. And the client will say, well, I'm just making it up, but I just hadn't gotten around to it. And so the lawyer who is the volunteer can, for 15 minutes, can tell somebody how to do a food stamp case. And then that person can call back 30 days later and say, did you get to the food stamp case? Find out the client didn't, and say, well, what else can I do to help you with the food stamp case? And this does not take any real big commitment. It doesn't take any great insight. It takes a very limited subject matter, but it lets you talk to somebody in a very personal way and lets you feel like you've accomplished something in a very personal way. And the other thing it does, for our perspective, it allows us to quantify the value of our work. So if somebody calls in with a landlord-tenant case, and we then later on help them with a food stamp case, we can say, we got this client this amount of money in food stamps by having a volunteer. A wonderful volunteer kind of thing that takes very little time, very little commitment, but is a lot of satisfaction. And that's one thing that I think people don't necessarily always get at large law firms. Not me. I don't want to put anybody on the spot, but dealing with an individual problem and getting somebody food stamps is not likely to be something you would get at King and Spalding. So not to single out King and Spalding, but it's the kind of thing that you can do and really make yourself feel good. So just another example.
I want to add to that because I think it's important to note that there are a lot of reasons to do pro bono work, but what always has motivated to me in doing pro bono work is how it made me feel.
Right, exactly.
And back again to the days of doing those adoptions, those grandparents that I brought with me to that board meeting, I did the adoptions of several of their grandchildren. I think it ended up being 3 different adoptions. For each one, they brought me a red velvet cake. And that was 20 something years ago, and I still remember how that made me feel. So I'll ask Radha, is it something about how it makes you feel too that motivates you?
Absolutely. And I think helping people who have otherwise felt like, I don't know how to deal with this, even if ultimately, not every case is successful, right? And you can kind of redefine success in some of these cases too, but, using the immigration context, our immigration system is very hard. It's very hard to navigate as a lawyer. I can't imagine as an immigrant who's not a lawyer, how much even harder it would be to navigate alone. But just, seeing the look on someone's face when they realize that you're going to help them, you're going to be their lawyer. Like that just has always made me feel good. And I will say there was an asylum case that we had that passed around a couple different people's hands as folks left the firm. And our client had her interview in 2019, I think. And a couple months into the pandemic, she sent us an email saying that she was granted asylum. And in that, deep, dark depths of everyone being stuck at home for 3 months, that made my month. I won't even say that made my day. That made my month. And that wasn't even a case I was, directly working on. I helped prepare her a little bit for her interview. There was another lawyer that went with her for it. But just knowing that in that tiny little way, I was able to contribute to that meant everything.
I got to witness it the other night. Rada, you were there at our event. We had one of our nonprofit clients spoke about a situation that they faced. They provide housing to low-income people, and we're basically the tenant for these 20 people at an apartment building who were going to be kicked out. They were in a dispute. And the lawyer who helped them resolve that, renegotiate their lease, get everything in a better position so their clients can continue to live there, was there. And I got to see them meet for the first time because so much is by Zoom these days, right? And it was so rewarding to see how happy it made that attorney to meet the person, and hear the client talk about what an impact it made. That's what motivates me in my work every day. Steve, I'm sure you feel the same way.
Certainly do. I don't have the direct client service like I used to many, many years ago, but I kind of live on the indirect success of other people in the program, and that's what makes me proud. By the way, there was one other thing that I throw out as an interesting development from having pro bono, which is not something I ever thought about. We've got folks who work for us for pro bono who, do work on certain kind of areas, but we also know they have expertise in their own practices. So we have a lawyer who does a lot of work with us pro bono. His name is Bill Stanhope, and Bill had a lot to do with insurance. Well, we had a big case, and we found out that the people on the other side of the case were insured. And he was able to tell us what the limits on the insurance were and how we could talk to the insurance company and how we could settle the case, because the lawyers who represented the defendants in that case, they said, well, we don't know, but he knew that we could talk to the insurance company and we could settle that case because the insurance company could settle the case, even if the defendants couldn't. So a lot of times what I'm getting at is you can find out indirect things from volunteers just because they're associated with the program. They have expertise. You can take advantage of them. I certainly have taken advantage of a lot of King and Spalding lawyers over the years, including your Josh Kamen, for expertise like in buying our building. All of these things that you end up, because you have an association with folks, they have expertise that you can tap into if you're just creative enough to think, maybe I can call. He's been helping me with pro bono, but he does real estate work. Maybe I can help him negotiate a lease for us or something. It's just, there's so many indirect effects from pro bono that you never even think about.
And I think that those indirect effects, really, I wouldn't put them as taking advantage of, right? It's people are happy to give of their talent in a way that makes sense.
No, that's just
and
my
if you can find that connection, it's wonderful. Everyone's more than happy to do it for organizations that they care about and respect.
I just like to think I'm taking advantage of them. That's just the way. That's my mindset. No, I understand that. In fact, Rada, that's a wonderful point, because I think Bill was so delighted that he was able to contribute to this big case. We weren't taking advantage of him at all. He was delighted to be able to contribute. I just like to think about it. And I like to use that expression, that's all. Don't mean it.
Rachel, I think you're muted still.
Sorry, trying to protect you from my cough. I see that every day in my work where people have this unique expertise. And then if they find that they're able to do pro bono work in that area of
Absolutely.
expertise, they get so excited. They
Right,
thank me for
exactly,
it.
exactly, yeah, yeah.
Well, I would like to make sure to get this question in since we have Steve on. Steve, as I mentioned, you've been in Atlanta Legal Aid since 1969. You're on the cusp of retirement. So what has changed over those years?
Well, I think there's been much more of a challenge in pro bono. As I kind of alluded to, I think in some ways the getting people to do pro bono was a lot easier. There weren't the kind of demands that Radha was talking about. It wasn't so bottom line, unfortunately, it is now. And the other change, I think, is that the law firms, even the King and Spaldings and the Austin and Birds of the world, are not as much associated with Atlanta as they used to be. So the kind of feeling that everybody had a community responsibility in Atlanta is, don't get me wrong, folks at King and Spalding, Austin and Bird still have that kind of commitment, but they're part of either they're part of larger organizations or they have other offices. And so they have more of a responsibility either regionally or nationwide. And it's harder, I think, to get that kind of, well, I'm in Atlanta, I owe it to the, I owe it to the community. It's just a little harder. And that's why we've had to be more creative about the way we get people involved in pro bono. For all the other reasons that Radha talked about, an additional reason I think is it's just the nationalization of law firms has made things more difficult, I think. Radha, does that ring true for you?
It does. I will say in my pro bono role at the firm, I am still obviously here in Atlanta and am grateful to be plugged in with the Atlanta community, but my responsibility is firm wide. So, I spend time not only talking to folks in Atlanta, but also in every city that we have an office in. It's what
Now,
I'm really
sometimes
supposed to be
that's a
doing.
positive, don't get me wrong, because sometimes you can get something from another firm. Oh, they in Los Angeles, they do this. Why can't we? Or sometimes we can be a trendsetter for other offices of a particular firm. And so that's valuable, but it is harder, I think. Whereas if Radha were only working in Atlanta, then I would have her over at my offices all the time, as opposed to having her go to other places in the country. I would like to demand her all of her time. Can't do that because she's got more responsibility than just Atlanta. So it's just a change, and we have to be thinking in a different way. That's pretty much it. Rachel, is that the kind of thing you were interested in, or is there something else?
Yeah, it makes me think about during just the changes in the past few years.
Right.
COVID, we had some volunteers that
Right.
left Atlanta firms. They're still living in Atlanta, but they're working for a New York firm, and that tie to Atlanta just seems more, it worries me as that gets more removed. But there are positive things, of course, that have come out of it too. We already did most of our work, by phone or email. We've switched to Zoom. So I think there are some good things that have come out of it as far as the ability of people to get involved in things without having to fight Atlanta traffic and stuff like that.
Oh, that's a value.
Yeah.
But it's a technology issue too. We've got to figure out ways to tie the clients with the lawyers in ways that we didn't worry too much, because the lawyer would come down to one of our offices on Saturday morning and meet the clients. You can't assume that works out so easy anymore. You got to figure out technological solutions. And then the other thing is, if anybody goes to court, how do you do a Zoom meeting in court? There are new challenges that were presented by COVID and by the changes. Yeah.
Mm-hmm. Yeah, I'm sure over those many years you've faced many, many, many challenges. I know you have. Keeps it interesting though, right?
Mm-hmm.
Well, I want to go back to one point that Rada made, which I liked, which was there are other ways to get involved. We talked about pro bono work, but there are ways to support pro bono legal service organizations outside of doing pro bono work. So if we can talk a little bit about that. Rada, you want to add on to what you're
Sure.
saying?
Yeah, I think probably most of them have kind of come up in various parts of this conversation, but, obviously, giving of not only your time and pro bono, but of your treasure as well. Donating to organizations that are doing work that you believe in, getting whatever organization you work for to sponsor events, sponsor fundraising events, is a great way to do it. Like Steve mentioned earlier, serving on the board of an organization is just a really meaningful way to get involved more deeply with an organization, with the cause that you care about. I think introducing your friends to organizations that you like and issues that you're passionate about, getting them involved in whatever way that they are able and choose to be involved. And just being a voice in the community for issues and for organizations that are important to you. I think all of those are really valuable ways. And I think, each of them may not be possible for everybody, but I think at least one of those is possible for everybody who finds an organization or a cause that they care about.
And I'm surprised I'm talking about this, but I will anyway. And that is, people could use social media to advertise the kind of good work they're doing and the kind of good work that we're doing. It really makes a lot of difference just in terms of support in the community. And it's the kind of thing that I've had to learn over the years really makes a difference. Going back to the point about changes, it's not something I ever thought about in 1969 because it didn't exist in 1969. So, but advertising what you do and being proud of it and being a community champion is a great role for people who may, if you do one pro bono case and you just see one client and you realize the value of what you can do, advertise that you did and the value of what you did, and it can really make a difference.
And I would add, it's something to think about when you're deciding who to vote for. Look at who what the candidate's views on, funding Legal Service Corporation, for example, or finding other ways to fill those justice gaps. That's a huge part of this. That is something all lawyers should be considering, in my opinion. Let's see. What else? I have one more question. This is going to be too long of an answer, Steve, but I still have to ask it.
Okay.
If you had a magic wand and could fix just one part of the justice gap, what would you do?
The easy answer is to just promote more funding, because bottom line, in order to really realistically do pro bono, you need an organization which provides the infrastructure to do it. So bottom line, the funding is always the issue. And figuring out ways to provide more funding, and maybe in particular areas, like we've been pretty successful in developing funding for domestic violence, kinship care, the work you were talking about. We're now going to get some funding for our ability to have lawyers in various hospitals to deal with issues that relate to children and their families in these hospitals. So funding is always the key as the starting point. I just don't, I know that's mundane and it's such an obvious answer. I don't have there is no magic. I think it's just giving us the opportunity to try to figure out new ways to provide services.
Steve, I just put my website in the chat. What's your website? Is it ALAS?
AtlantaLegalAid.org.
Okay. All right, I put both of those in the chat so y'all can look up ways to get involved on a volunteer basis, ways to donate, etc. Rada, any final thoughts?
There were a couple things that I wanted to raise and I've not necessarily been keeping time. Oh, we're like right there. But the State Bar's Access to Justice Commission has a couple initiatives underway right now, and there are two that I wanted to mention. And one of them is that last year was the first year that the State Bar collected pro bono hours, for lack of a better way to put it, but allowed people to basically self-report pro bono so they can be recognized for their pro bono service. So there is, I don't have it right in front of me, but on the if you Google it, I'm sure you can find it. There is a form where you can self-report your pro bono hours for recognition. The deadline for 2022 hours is March 31st, so it's coming up. And the other thing that I wanted to mention is that the State Bar Access Justice Commission is working with a company called Paladin that offers a technology that will allow legal services providers, the nonprofits that we've been talking about for this past hour, to put up their projects where they're looking for pro bono volunteers. And volunteers from around the state can then sign up to work with those organizations to help their clients. It's not quite rolled out yet, but it is coming. And I am hopeful that that will be a game changer even outside of the Atlanta area where most of us tend to be clustered. Rachel, you're back on mute.
Thank you both for your time today.
Thank you, Steve, Rachel, Ratha. That was very, very helpful, and especially appreciate the reminder to think kind of in creative ways about how we can do pro bono, because I think y'all are absolutely right. Sometimes people get scared and think I can only do one little area and don't think about the other ways they can contribute. So this concludes our session for today. As a reminder, we have two more CLE sessions this March. There's one next Thursday from 12 to 2:15. We are squeezing in the section's annual meeting, which I promise will be short in between those two. And then we have the last one on March 30th, also 12 to 2. So look forward to seeing everyone hopefully next week. Thank you.
Ladies and gentlemen, this does
Thank
conclude
you.
today's conference. Thank you for joining. Have a great day.